This is who we are. Like, you are not going to outwork me. I'm the guy that's going to die on the treadmill.
My son's leaving, and I'm like, here's all these tools. And they're like, yeah, I'm not interested.
Boom.
Awesome.
That was good. How'd you like it?
Thank you. That was great, dude. You're a rock star.
Fam, what's up? Welcome back to the 𝗱𝗲𝗃𝗲𝗽 Podcast, where you get the real, the raw, and the mind of entrepreneurship. We are sitting down with none other than Mr. Fergestad. This guy is a rock star here in the Valley. All right, so check it out. He's very low key. He likes to kind of stay under the radar. Although he runs a very, very cool podcast, which I was a guest on a while back. Thank you. And we'll talk about that here in a sec. But this guy, I mean, he's been all over the place when it comes to the real estate investment world, right? Well, first off, he has a PhD in neuroscience. All right, so that'll tell you the level of commitment this guy has to the stuff that he takes on, right? Real estate investor, from rentals to wholesaling, rental, apartment syndication, big projects in apartment syndication. Recently went back to this place where you want to bring it all, collectively or collect it all together and focus more on the cash flow side of things. We were just talking about that right before we hit record, and into the lending fund, right? So you're doing a lot of things, man. You're doing a lot of things. We had a great conversation last time. We went out for lunch, and after the podcast, you had me on your show. The conversation was nothing short of extraordinary, man. So thank you for being on the show. Thank you for taking the time to come down and sit with us.
Thank you. It was good stuff. Our lunch got deep into family and stoic principles and raising kids in this day and age as well, which I really enjoyed.
Yeah, for sure. It was a really, really good conversation, and like unpacking, that kind of stuff is I think a lot of times as entrepreneurs, we're moving fast, whether we're on the loud side of being out there with people, or we're more of the, kind of working, low key, which is you like to keep yourself, I feel like, out of the spotlight. But I mean, you're doing a lot. You're doing a lot of great stuff.
Thank you. I am. I mean, as a nerd, I've been right. I just recently learned that most people, over half, are introverted. Right?
Yeah.
So I don't feel it's just you only see the extroverts evereverywhere because they're off doing stuff. But
yeah, exactly. Being loud and obnoxious.
Yeah, but my wife says I've emerged as a social butterfly from my nerd cocoon. It's taken some while. It took some effort.
So walk me through it, man. I mean, you have obviously, like, one of the things, right at the top of your resume per se, right? You have a PhD in neuroscience. How do you go from that to jumping into real estate? I mean, I had a similar kind of move with organizational psychology, but I want to hear your path to that story.
Sure. Well, I think I'm a hands-on type of guy, and even in neuroscience, I was experimental, right? I was in there doing with my hands electrophysiology, super detailed work.
Yeah.
Electron microscopy, molecular genetic stuff, all sorts of things like that. I wasn't like a theoretical psychology focus. So, being a guy who likes to work with his hands, my dad was very handy too. So I could fix everything at home. I wanted to. I enjoy building stuff. I'm a maker in that sense. So that just seemed like a no-brainer when I wanted to get. When I had money finally to invest, my wife's a physician, and after I don't know, it was our 40s, we actually finally bought our own house and traded in our iMac boxes as nightstands for actual tables and stuff. We actually started to pay off some debt and things. I realized our traditional investments were pretty crappy, and I didn't really know anything about investing, right? I knew a lot about biomedical stuff, but I didn't. Yeah. It's kind of a common
So it's
theme
safe to say that you started late in the game.
Yes.
Right?
For sure.
Yeah, man. I mean, that's incredible. I mean, it's very impressive too. I mean, given the amount of verticals that you've tapped into, right?
Right. Well, so, yeah, it's a common problem.
Right around what year is this?
2005, 2010, somewhere in there. So, and it's a common problem, right? I mean, physicians, for example, they have to work for decades and to be very specialized in their thing. They don't have time to learn about being an entrepreneur and finances and stuff. They just kind of trust their financial advisor to help them out and watch their back. And I followed that advice too. And it wasn't until I had time to sit down with it and look at the market and look at my returns and try to figure out what's going on and
contemplate, right?
Yeah. What are the better ways forward? And you have to start educating yourself, really. Yeah. And that's kind of what I do now. A lot of it is educate. Just share what I've learned and things like that. But to circle back to your other question though, and being handy, when I did learn how awesome real estate can be, I wanted to flip and hold my own plexes, right? That's because I like to renovate and I can do all that stuff. My dad taught me. I even do electrical. I'm pretty comfortable with certain levels of things, and I enjoy that stuff. It's just not scalable, right? And it's kind of a job, and if you're up for it, right, it can be great. And that's kind of where we differ a little bit.
Not really, because I mean, I'm not sure if I told you about the first time that I flipped the property.
Okay.
The idea was that too, like go into it, and I mean, it sounds like you went into it. You went into the repairs. You were doing the work, right? Because you knew how to do it. Is that how it went?
Yes, I've done that. Yeah.
So that was that wasn't a thing I did. That was my strategy at the beginning. Okay. Like, oh yeah, absolutely, I can buy properties and then I'll just fix them and flip them myself.
Right.
After the second property where I actually worked on it, and I was like, this is a pain in the ass.
It's like a job. You bought a job.
Yeah. This is not, how can I make a living as a flipper like this?
Well, if it pays well enough and you like it, that's great.
Yeah. Right. So I mean, I found out it wasn't in my model. I mean, it sounds like from where you transitioned to, you came across something similar. So.
Well, I transitioned. I realized I didn't have the bandwidth, particularly as a parent.
Yeah.
And I had kids. My wife's doing a 24-hour OB shift or something. I'm the fill gap. I'm the guy who has to do all the other stuff. And so it's something that was a little more flexible. Real estate investments are great, passive or active. I started to realize that a job is not an investment. Right?
Yeah.
And I had to start getting into external property management and things like that, and having other people run it, and that it has some of its own challenges.
So did you begin with multifamily when you first got into real estate investments?
No, single family.
Single family?
Yeah, and land wholesaling and stuff like that.
Yeah. I mean, I think I got in, like, now one of the things I do the most is real estate wholesaling, right? But I started with fixing and flipping, and then I feel like we tinker with models, right? Like, okay, cool, this is a cool thing to do, this is a cool thing to, and eventually you're gonna find the thing that you click with.
Sure.
Right? You're good at, you enjoy, and there's so many different ways to play in the space of real estate.
Right. And provides value to other people, and that can vary on the market cycle as well.
Right. Yeah. So you start with residential. You do get into the flips and whatnot. How do you grow into the other parts of real estate, like the different niches that you tapped into?
Well, partly because shiny object syndrome, right? And like, oh, that's cool. And see all the different options. That's a very powerful aspect of real estate.
Yeah.
There's so many options, and there's a low barrier to entry, which is why real estate has created more millionaires than anything else.
Yeah.
But that's also part of the problem, is there's so many things out there and so many ways you can get into trouble if you don't know what you're doing and stuff. So I got into multifamily specifically through a relationship. I know a guy who was fixing up an apartment complex in Vegas and wanted some investors, and I was like, sure. And that was passive, and the returns were great, and I was like, why am I messing with these single family things actively when that did better passively, Yeah. So it started to open up my eyes to the power of scale, right? Like, you can try to run 10 single families all around town, or one 10 unit in one place, right? They all have the same water fixtures and everything, anyways, the economies for expenses of that, but also commercial values work differently, right? They go off of cap rates and NOI.
Right. Yeah. The way that you underwrite the deals, you look at the deals, the return on the deals is going to be different, right? Would you say there's a higher pay to play element to going into multifamily than residential, or did you find ways of mitigating, the cost of getting into a project like that? And if so, let us know, because we want to get in it.
Well, yeah, they're more expensive. You don't have to necessarily use your own money though, and in fact, that's why so many of these bigger deals are syndicated. Otherwise, we just do a joint venture. You and I would buy the property, but after you and I buy a few apartment complexes, we run out of our own money.
Right.
And
it's tied up assets.
And if you're bringing in partners that are just bringing in capital, they're not actively involved in the business plan and doing the work, the SEC calls those investors, and you're selling a security. And that's when you have to turn it into a syndication. And it's different legal structures for the most part, but I'm a limited partner in other people's deals, and will continue to be. They can be great. You're not liable for anything that happens on the property. You don't have to sign on the loan. You don't have to do the work, right? You just sit back but you have no control, right? So you got to weigh that with the project and your comfort level and stuff. It's really trusting the operator, right? The sponsor, the general partners on the deal.
Yeah. How do you go about building those relationships? I mean, I know that at the end of the day, we're in the relationship business. Yep. If you're doing real estate, you're not in paper pushing or home sales or anything like that. It doesn't matter if you're an agent, if you're a fix and flipper, you're in the relationship business at the end of the day.
For sure.
How are you, for example, creating the level of trust with somebody come in and then give you a bunch of cash so you can put it into a project?
Well, it takes time. For me, I mean, I have my own sort of due diligence checklist for operators and properties and stuff that I've learned over the years. I've become more interested in their values. Really, I mean, most people start going, "Oh, tell me about the deal. What's the deal?" Right? And really, the deal is the last thing you should be worried about. Because a good operator can ruin a good deal or save a bad deal. So the operator is paramount. And they won't be, and then market's a factor too. But again, a good operator won't be working in a bad market, right? And
right.
So operators paramount, and so that's back to relationships.
Well, let me circle back to the values part. When you say values, I mean, you sit down with people and it's like, okay, what exactly are you looking for? Are you looking for hands-on type of stuff? Are you looking for? Is that what you're talking about when you're kind of screening somebody to work with?
It's more personal values to me. Yes, they have a business thesis.
Yeah.
Right? Are they doing heavy value add? Are they remodeling all the interiors of the
the nuts and bolts of the business? Yeah.
Do they have the construction management, project management experience to do that? Do they have the track record for that? Do they have the right team in place? But that's kind of separate. I mean, the first thing I want to do is, like you said, relationship, and it's networking and just getting your butt out there and talking to people and showing up to events and start meeting all the people that are transacting. Right. But people that I get along with, because these deals sometimes last a long time. You can flip a house in a month or 2 or 3, depending on the project. But the people in long-term rental properties have leases. You can't go in and kick them out while you renovate and then let them back in very easily, right? So usually you're looking at 18 months minimum if you want to do if you want to renovate all the units and some of these things. And so you're married to these people for a while. Yeah. And you don't want to jump into a long-term relationship with them willy-nilly.
Well, at that point, strategy plays a big part, right? Like you start using vacancy rates to reno. It's like, all right, this one just became vacant, and then you come in, you roll it, and then try to kind of play Tetris with the units, right? How big are you guys going on units and apartment syndication and doors?
Well, it really depends. So you can syndicate anything really, but the cost associated with the legal work and stuff, setting up with the SEC attorneys and stuff. Mm-hmm. I've seen people syndicate $2 million, maybe a little less, but usually $4 or $5 million or more is usually sort of the price point where it's more common, where it makes sense. Usually, so you're
talking 50, 100, 150 doors plus?
No, it really depends on the market, right? Right now I'm looking at I have a team where we're looking at some small multifamily in Ohio, and you can get things for $70,000 a door, maybe. Yeah. Whereas here in Phoenix, this is summer 2025, I think you're looking at for like a Class B, Class C, 1980s product, you're looking at $220,000 a door.
Dude, it's crazy. I remember,
yeah.
go back 10 years and we were seeing them for, $40K, $50K.
Right.
I remember I was out stomping, seller appointments and 2013, 14, 15, 12. And yeah, the price points were so different. I'm one of those guys that, I kicked myself in the ass every morning because I didn't buy properties back.
No,
I didn't buy and hold properties. I was just wholesaling everything.
Yeah, right,
it was like, oh, dude.
I have a buddy, Central Corridor, Phoenix. He bought a series of kind of like a portfolio of fourplexes.
Mm-hmm.
And he renovated like one unit or two or something like that. And he just showed that you can get the bump in the rents.
Yeah.
And that was it. And then he just turned around and sold it like 6 months later.
Yeah.
And almost doubled it got double what he paid for it.
Yeah.
Right. And he bought it for like $2 million, sold it for $4 million in like 6 months or something.
It's incredible.
That market was.
I know, it's crazy. When you're out there, when you're operating, you can see the ebbs and flows of the market, and then you can adjust, right? You can kind of forecast a little bit. I don't want to say predict because that's a heavy word in real estate. I don't think anybody can predict, but you can hedge against. Okay, maybe I see this coming, or I see this adjustment. Or I see based on the temperature of the market or the trends in sales and that type of stuff. And you can tailor your approach, but that becomes even more more crucial when you're looking at bigger spends and dealing with OPM, right? Other people's money.
Yep.
That's it's critical. Like you said, the operator is key.
We're doing. I'm a general partner on a series of townhome builder rents we're building here in the Phoenix Valley, and we had a project. The lead sponsor, 𝗱𝗲𝗃𝗲. Other people on the team were all excited about this one property we wanted. We're looking for infill spots, about 100 units per property. You're looking at a minimum 7 acres, for example.
Yeah.
And the price was right. Everything was really good. It was just it had some entitlement issues, and he was like, if it was my money, I'd do it. But right, it's other people's money. I don't want to get it tied up for years.
Yeah, exactly. Totally different story, man. It's a totally different beast. So switching gears a little bit. Okay, so you've done a lot in the real estate space. Even though you started late, right, in the vertical, not late, career wise. PhD and whole.
Right.
Background in neuroscience and just accolades before that. But it goes to show, right? You can do a lot if you pick the right vehicle. Which takes me, you talked about values. You talked about values with the people that you work with. This is a conversation that we went to town on it last time we talked. But you have this very interesting way of looking, right, at the business and life counterbalance. Tell me about that.
Well, as you get older, right, you have your existential thoughts, and we just this summer we hiked across the UK with friends and some of the fathers and sons. We hiked Hadrian's Wall. If you're familiar, it's the old Roman wall that separates Scotland from England, which I always think is funny. The Romans conquered so much of the world in their empire, and they got up to halfway up the UK, and they're like, "Yeah, this is good. We're just going to build a wall. We can't deal with those crazy Scots up there." That was funny, but a lot of it's still there. Particularly in the middle, you can go through parts of it. They've repurposed lots for local buildings over the last 2,000 years. There's a lot of cool museums and forts and stuff there, and they've rebuilt part of it and stuff.
It's awesome.
It's just a fun one to go across, but. You start realizing that it's more about experiences than money, right? And so it's trying to. I've been focusing more on getting some sort of balance between. I enjoy what I do, but I have I have a son just started college, and I have a daughter in high school, and they're both awesome, and I want to spend as much time with them as I can. They're teenagers, so they don't want to spend as much time with me, but I'll take whatever I can get, and I want to be there when I get the opportunity. So. That's a big part of. I could work. I like working. I was just watching 𝗱𝗲𝗃𝗲𝗽. He was talking about something like this. He's like, that's what he does. That's his happy spot.
Yeah.
And even
just the working thing. Yeah.
Yeah. Even his wife.
I can relate, man. I'm telling you.
Yeah.
Yeah.
Yep. It's I find great joy in making things better, creating value, and helping people out, and that's not work to me.
Yeah.
Right. And which is great, but then of course family and all that stuff's really important too. So trying to balance that. Alex, and apparently he told 𝗱𝗲𝗃𝗲, he's like, I love you, but my real love is work. And I was like, wow,
well, I mean, they're kind of two peas in a, what do you call it? Two peas in a pod.
Yeah.
Because he's wired very much the same way. I mean, I think, and they've been, open about that. It's like, I mean, work is first, and they're very mission oriented, right? They have this big purpose, and I feel like whenever it doesn't have to be this huge humongous purpose like populating Mars, for Elon or whatnot. I mean, but as long when you find the thing that okay, this is good, this is me good, right? I feel like there's a whole other layer of empowerment that comes with that, because and I'll speak, for myself on this, but when I realized what my focus or my purpose was, right? The thing that made me happy, the thing that, okay, like everything I do connects to this one thing and it just pushes over. And as long as I'm in alignment with that, like I can't feel bad about the setbacks. I can't feel bad about not moving faster. I can't feel bad about, because I'm walking on purpose, right? Yeah. It's just a matter of time at that point.
That clarity allows you to, one of the definitions of success that I like is living according to your values, right? You're in congruence with what you care about, right?
Right.
That may change over the different seasons of your life, right? And right now I used to work 120 hours a week, right?
Yeah.
I used to sort of subconsciously compete with my wife when she was like as a resident, right? They do crazy hours and stuff, and I work nights and weekends too, right? And she was at the hospital all the time, and I was always at the lab all night, all weekend. It was fun. When I was a little younger and I didn't need as much sleep. But I'm okay with that. But it took me a little while to realize that I had my best insights when I would leave work, when I would go on a hike or something like that, right? Yeah. You take a break and you can be much more efficient with your time, and so that there's a little balance there too.
Well, that's a very important key, point, because when for example, we're problem solving, right? Or we're too caught up in a situation, all the bandwidth is in that one little spot. It gets crowded. Our brain gets crowded. Our thinking gets crowded. The processing power gets crowded, and it's not it's not effective. We have this thing called the law of diminishing results, and we hit that right when we are doing too much of one thing. Next thing you know, you're hitting a wall. You're hitting a wall. You're hitting a wall, and then you feel like you're not moving forward. It's because you're saturated with that. You have to disconnect. You have to do what you're talking about, which is find your thing, find your reset, and the thing that's going to get you back on at least a fresh mode of perspective, a little fresh air.
Constantly investing in your own education and personal growth. Right?
Yeah,
that's kind of where that's how I balance that ship, and just keep. There's no end of things I don't know, so that's fun. I started to enjoy that.
Yeah, no, that's a very interesting take. I think I can be blamed, or I can be judged as a workaholic. Okay. I get excited about the stuff that when I'm in alignment, right? The thing is that I've been on out of alignment with the stuff that I enjoy doing, still doing tasks for the sake of making money and being on survival mode. Right. And when I've operated under that premise, I've gotten burned out. I got burned out once, and I mean that was not a good experience.
Just going through habits, just because you were good at it, and you grind.
Exactly, just grind mode on stuff that I didn't like doing. For example, I used to own a different business, a transportation business, and this is, I was mid about 26, 27, right around that age, and just going to the office and then working all day and going back. But it wasn't like the tasks and the stuff that I was doing. I hit a ceiling of creation, I feel, right? Because I built, and then I had the systems and the processes and the tweaks and whatever, and then I became an operator in the business, and my creativity stalled.
Yeah, no more vision.
No, exactly. Okay. And like I after that, I realized like, oh shit, the thing that makes me smile is putting good stuff together and improving, right? And moving the ball forward for the sake of whatever you want. It's just like that progress makes me happy. So,
sure.
That
is one of the best definitions of progress that I've heard, is just the incremental progress towards a worthy goal.
Exactly.
It's not you don't hit the goal and now I'm happy for the rest of my life type of thing.
And when you're chasing, I feel like when you're chasing the dollar, right? When all you're doing is moving the goalpost. If you're not, if all you're doing is going after the cash, and you know, very well, like I very well started on survival mode, right? It was like, man, I just got to make ends meet. I just want to make some cash, and I got to pay the bills, and I want to put some food on the table, and all that. So I went through that, and hustle was a very, very good tool for me. It was a very, I mean, it was like the weapon, right? Like, you are not gonna outwork me. I'm the guy that's gonna die on the treadmill, and I had a chip on my shoulder because of that.
And that's good. It's just not the healthiest.
Exactly. It
can be constructive.
It's good fuel if you use it accordingly, right? But again, it's not sustainable, right? You can't keep that up forever. Right. And I feel like, you know, getting to this place of the reason I got to burnout was because I kept operating that way, even when I was out of survival mode. So the food was on the table, the bills were getting paid, and I was still operating under the same context, right? The same, you know, the same MO, and just burning the midnight, you know, candle and not creating, not switching gears, because it became a habit for me.
Right. One thing. I just finished rereading Die with Zero.
Mm-hmm.
You read that, I assume?
Die with Zero?
Yeah. No. Yeah. Okay.
No, I don't think I've read that.
It's a popular book. It's good. It's a lot of people think it's just a financial principle, right? And that maybe it's selfish sounding or whatever. But the idea is, well, I think the average age of inheritance is like 62 or something like that, which is usually when their parents die.
Yeah.
Right. And it's like, well, that's too late to help out your kids. Right. Give it to them before you die. Right. Try to budget better so you die. Right. But it's not just financial zero. It's experiences, optimizing your life's experiences. That's really what life's about. It's not if you work for money, but why? Why? You know, what's the why for the money? The other thing was working for something that you care about, passion. Mm-hmm. Right. Now, I recently was reminded that passion doesn't mean finding something you that brings you joy, people say if you do what you love, you'll never work a day in your life, type of thing. That's not the word passion. The root of it means to suffer, right? Like Passion of the Christ. That was the original term of it, and that's what it means. When you care about something, you'll sacrifice things for it, right? And that's kind of that was a good reframing for me. That, you know, if you're passionate about something, it means you're gonna.
Yeah,
you're gonna grind.
You're okay doing
it. Enjoy the grind.
Yeah, exactly. Well, I mean, I don't know. I think it comes down to the way that you see it, right? Because there's, you know, I still do long hours. Like right now, I got into a couple of new like things that I had no idea, like developing AI and, you know, stuff like that.
Yep.
I mean, I'm like,
it's wild. It's hard not to get excited about it,
bro. I'm back to square one in the expertise world. You know what I mean? It's like, man, I've been building and I knew my stuff, and then you tap into something that I was like, man, I'm a baby again. Yep. So it's like I don't know, it's like a rebirth every time you move. You I don't know, you add on, you know, to your tool belt or something like that, right? But it's I feel like that's the kind of stuff that you have to be okay with. If the big or the end goal, right, is the direction is one, it's clear enough, and what you're trying to get to is you know, it's worthy, right, of the time spent, I feel.
Yes, well said.
You know, seeing things in a different light every now and then, resetting, right? Like when you're going through the middle of it all and whatnot, you're going through difficulties, especially, for example, in your case where you're dealing with lending funds and projects and stuff like that, where, I mean, the bulk of the responsibility lands on whether or not you're able to analyze something.
Sure.
Right?
Sure. I'll something that's been in the forefront, particularly for multifamily in the past couple of years, is a lot of people, and I've lost money on I mean, personally, my investor money in other people's deals. Yeah. Because of the Fed change and the drops the property values, right? Yeah. And it makes it debt service coverage ratio, and they won't refinance, right? Yeah. And so I've had two. I just got a week ago. I got an email from people I invested with on a property in Tucson. Yeah. And they're like, yeah, it looks like we might have to sell this. Yeah. And loss of all the investors' equity. I'm like, yeah, ouch. That's not a little bit either, right? But you asked earlier about how people get relationships with how I get relationships with the people that I want to invest with, but how people get and who invest with me find me, and how we build relationships through different ways. I usually want to meet them and talk to them in calls, but I do have enough content out there. Apparently, I don't have as much as you. You have a lot of great content out there.
Thank you.
I'm starting to put more out there, and I've had people invest with me who've never met me. I'm like, I can't believe that, right? That maybe they saw a recording of me talking, or they devoured all the content they could find about me or something.
Yeah.
But yeah, I've never even had a phone call with them. They'll put like a 6-figure check into one of my deals. I'm like, who is this guy who just showed up on the
How is that happening? Well, I mean, I think it's if you build a reputation and a track record, people are going to be able to find that out. And it's very difficult to hide nowadays. So especially when you're out there, I mean, you're the Phoenix Prosperity Podcast is so guys, if you guys haven't checked it out, go check it out with Tim.
I've met all sorts of great people, and it's all over the place. I have people with some nonprofit charity, somebody running their tech company. It's all over the place, which I enjoy. It's great. Yeah,
well, I mean, it's different perspectives, different areas, I guess, or avenues of life, right? That come into it for one similar and connected purpose. Yeah. So I feel like, I mean, this was taught to me by a dear friend of mine. It's like, dude, if you're gonna be, you have to be loud. You have to be loud in your own way about the stuff that you're doing. Otherwise, people don't know that you're doing things, right. And then you're doing a disservice.
For sure. That's a good point. That's something as a nerd that I've struggled with, having to be vocal and really get excited. I'm very good at strategy. I play a lot of games and all that stuff, and people don't want to play with me anymore because I always win. But I once I know something, I'm not good at like beating somebody over the head with it and go, no, you're doing this wrong. You really need to know about this. And I guess that's sales, and I'm not.
Well, I mean, I guess it's a different vertical. I was very self-conscious about like putting myself out there too at the beginning, but I felt like I had something to say, right? I created content for years before I even talked about selling anything, but it was just value add. And to me, it was more of a, I feel like it does a couple of things, especially when we're running, things like podcasts and we're putting ourselves out there. You have to hold a space. It's the same thing with coaching. You have to hold a space, right? For if you're talking about something, if you're talking about, for example, prosperity, if you're talking about financial advice, or if you're talking about real estate and strategy and all that stuff, I feel like authentically, you have to hold that space for yourself. Right. So it's a way of keeping that accountability, self-accountability going. Right. I mean, I take that to heart, for example, with my students. Right. Whenever I'm struggling or something happens and the market shifts and the wholesale business just kind of takes a dip, because it happens. Yep. Right. It's like, I can't sit there and crumble. The first thing I think about is like, what am I going to tell my students? I got to get my shit together and figure something out, because they're counting on whatever I do to fix this. Right. And it forces you to hold a space, and it's a higher plane for ourselves if you choose to be out there. Now, you're also going to get scrutinized. You're also going to get, whatever. But I mean, it's part of the growth, I think.
It can be painful to burn away the the ignorance. But that's also something that's taken time to appreciate, the embracing the ignorance again. Right? it's because people, they expect you to know everything, and you can't know everything. I can help you, and I will share everything I know. And this is kind of like back to being a parent. You can tell somebody something, but they only hear what they want to hear, and they already have their own filter or lens they see things through. And I can give tons of information to somebody, but they're only going to catch what they are looking for and what they're ready for.
Yeah, absolutely. I mean, I think at that point it's a mass play, right? I mean, you go cast a wide net and then see who resonates with whatever we're saying, whatever content we have out there, and then you start building up your relationships. I mean, at that point, it's not just community and a following or anything like that. I mean, I think for the deeper sense of things, you build a relationship with anybody who's a lot of times they haven't even talked to you yet, but they've heard, for example, maybe they went through all your podcast episodes, and then now they have a connection to you.
Right.
Right. So, and you just never know, man. You just never know what you're going to say, who you're going to have on drop some gold in one of your episodes, something that resonates with somebody and totally changes their life.
Right.
So, I mean, I think it's a beautiful, two-way street, right?
Yes. Good point.
Good point. So yeah, what's in store for you? What are you working now as far as future projects or future focus, not necessarily projects?
Yeah. Well, projects. I mean, I'm always vetting new projects in the alternative investment space. Oil and gas is something that I've been trying to crack for years, and it's not that complicated. It's just there's different operators out there doing different things, and even good operators with a good track record, because they're generational, like in Texas and other stuff. The kid can screw it up, or over leverage or different things. A lot of my investors are high income earners, and they're looking for losses that offset active income.
Yeah,
most of our stuff is passive. It offsets capital gains and passive income. So I'm trying to find some good partnerships where they can invest. They can get some really good, W-2 tax savings. So things like that. But it's just a notoriously shady industry. So it's there's different types of things like that I keep wanting, because I'm trying to serve
I may have somebody that you can
investors.
talk to.
Okay.
I mean, one of my good friends is he's killing it right now in oil. One World Petroleum, he launched that a couple of years back. A great business guy. He comes from the real estate space.
Okay.
I can make a connection.
Sure,
Shout out Alex Ottawa, love you, bro.
Nice, excellent.
So,
so that's like on the business front. I have different asset classes being pitched to me all the time, and I generally try to stay in my lane. I like residential. People always need a place to live. Medical office. Those are very recession resistant too, and I have some of those funds coming to me from time to time. And I have like a third of my investors are doctors and so forth, medical professionals, and so they know and like that space as well. So I try to give them what they're looking for and what they're interested in, and try to help them out in that sense. But on the personal side, I'd say I had a son just go off to college, and super excited for him, super proud of him, and I know he can rock it. As a parent, kind of like when you're educating people in general, I always want to vomit knowledge on everybody and lecture them, and that's not how they learn, right?
Yeah.
You need to put them in an environment and let them figure it out for themselves, and hopefully they're not.
That can be scary as a dad.
It is, and
right.
so, but back to values, it's a focus for me right now, and I'm trying to. A lot of my friends are in the same boat and stuff, so I've been putting together more of family legacy stuff. I'm trying to share, not just like the difference between the Vanderbilts and the Rockefellers, right? The Vanderbilts blew their fortune, the Rockefellers grew it, right?
Yeah.
Why? How? They have a family constitution, the whole life policies, and different play in that sense. But they also have a whole different series of values, and that's when your kid's leaving the nest, right?
Yeah.
Like, these are the things that will help make sure you're successful, and part of it is identity, family identity, and things like that. I'm trying to get them to all work with me and remake like a modern family crest, right? Because my wife's family, my family, right? And our values for this particular day and age in our modern era.
Yeah, this is a stamp.
Yeah.
This is who we are.
Well, right. When you have to navigate life and things come up, you kind of if you know that, right? That's huge. That's huge. So that's the things that are on my mind right now that I'm trying to incorporate into everything that I do.
One of the things that I've always taught my kids, right, is like I let them struggle on purpose. Mm-hmm. It's like, and the thing is, like, I'll look at something. I mean, they're working through a problem or an issue. Where it's like, dude, figure it out. Like, figure it out. And then my youngest, a couple of years back, he was working on something, and he was stressed out. He was like, Dad, can you help me with this? I was like, oh, dude, that's cake. You can figure it out. I was like, yeah, I can figure it out. I'm a Cortez. And he said that. It was like,
nice.
A super big moment for me. Like, I was like, I didn't dance around it, but it was just in my head. It was one of those moments that stays, right?
That warms
it was like,
your heart.
all right, cool. Yeah, but it goes back to the values and the principles, and you hope that when you get to a point where they leave the house, it's like, all right, cool. They got all the tools, they got all the things. Now they got to go use it.
Right, victor or victim. Right.
Yeah, exactly. So yeah, that's incredible, man. I like that, and I like it's almost like a kind of like a full circle, journey that you've done, right? Going from the grind, and then in a completely different industry to to getting into fresh new starts late in the game, and then crushing it that way, and then evolving into all these other areas. Isn't it crazy how it doesn't just impact the professional side, but the personal growth side of
Right. Oh yeah. How can it not really? I mean, because it was such a big pivot for me anyway. It was, and being an entrepreneur is very demanding. It requires a lot of education and growth, and that was, I spent years and years studying and learning technical stuff. Yeah. Right. Reading scientific papers and other stuff, but I wasn't working on me. I didn't go home and then want to read all day some more for the rest of my night. I mean, so if anything, I wanted like an escape. Right, I'd go into fantasy and watch Netflix or something. But as an entrepreneur, it's constant growth, and that just lit a fire, and that pours over into the family and everything else.
100%. Yeah, no, I couldn't agree more. Tim, if I have before we sign off, I have one question that I'd like to ask everybody, and that's, if you were walking down the street and you ran into your 17-year-old self, what advice would you give that kid?
Start working on yourself now. This is, again, it's so hard because they don't want to, right? I have my
brother. You had that one ready. It was like
because that one's been in the chamber because my son's leaving, and I'm like, here's all these tools. Yeah, they're ready for you. When this will give you a leg up on everything in your life. And they're like, yeah, I'm not interested. And you're like, wow, it's just so hard to get them motivated to that sense. So that's trying to. So as a neuroscientist, I'm very interested in the psychological and the triggers for behavior. Right. And I'm trying to best fit that to the people I'm talking to help them be the catalyst for them to come to their own motivation and drive in themselves, and help them get to that spot. But so that's my knee-jerk response is, don't stop, because I didn't stop educating myself, because I went to school, and then I went to school, and I went to grad school, and but I didn't work on myself. Yeah. Right. So that was it. But I just don't know if I gave that advice to my 17-year-old self that he'd take it to heart. Yeah. He'd be like, I'll deal with that when I'm 30, and right now
I don't need it right now.
I'm young, and I'm selfish, and I just very self-oriented, which is not inherently bad. You kind of need to be. You got to be the risk taker at that age. You got to do those things. So,
yeah. Well, I mean, you're in this whole level of hey, I own the world. Because the world is so small at that point. Right. outside, like, I'm talking about like the real stuff, right? Like, because they're still at home, they haven't really lived. The reason I go back to 17 years old, if you notice on that question, is because when I was 17, dude, I owned the world. Yeah. I knew every single answer to everything. Yep. And that's like, oh yeah, this is easy.
My daughter's got you beat. She's 15. She knows it all.
Oh, yeah. She's even wiser. No,
but okay. I'm gonna change my answer. I'm gonna say I like that, because go crazy, take all the risks, do all that stuff, within reason, right? You're not permanently damaged, but go. Do that now, because once you're comfortable, right? Yeah. Maybe that's not the right word, but once you're successful, now you have something to lose. Now you can't play the same game, right? Yeah. But when you're playing and you got nothing, you can just go big and shoot and take all these risks all the time, because you have nothing to lose. And go big and go hard early, I think is probably this is some urgency, I guess, is my point. I want you to go. This is your window to just crush it. Go now, and because it's going to end, and you're going to want to, when you're 27, maybe 10 years later.
You're going to wonder about, what if I had done this?
Well, they don't care about regrets at that age, but they're going to be like, oh, well, I am going to have a life. I am going to, get married, have a family and stuff. I got to sort of get this stuff together for that now, and that sort of urgency, I think, is big.
Yeah, I like it. Tim, thank you so much, man. It's a great episode. If somebody wants to work with you, reach out, maybe find out more about, one, the podcast, two, everything else that you're working on, where's the best place to find you?
Right now I have a link tree set up on 𝗱𝗲𝗃𝗲𝗽.com. So there they can learn about why I like multifamily. They learn about the podcast. There's a few different links there. But Oak Street Assets, or Oak Street 101 is also, you can learn more about oakstreet101.com.
Oakstreet101.com.
Yeah.
We'll make sure to put all the links on the show notes as well, and the link tree that you have on there.
Yep. TimFergestad.com.
Perfect. Brother, thank you so much, man.
Thank you. This is great.
Great talk.
All right.
It's a pleasure having you. Fam, there you go. Go ahead and follow Tim. Check out the podcast as well. Yeah, I mean, remember, there's always different, it's never late to start. Two, there's always different strategies that you can tap into to start finding out the thing that resonates with you, right? When you're playing on purpose, even if you play 16, 18 hours, you're going to enjoy those 16, 18 hours a lot more than when you're not, right? So bet on yourself, move forward, put some urgency into everything that you're doing, and get shit done, all right? We'll catch you guys on the next one. Till then, stay focused. You got this.
All right.